Good evening, traders. Happy Friday. Today is January 31st, the last day of January. So I would like to congratulate everyone who is using our strategy along with us. January turned out to be a very productive month with return exceeding 4%. This was achieved by utilizing no more than 30% of our margin and actively employing both Vega and Delta hedges. So it was achieved very conservative way, which is good. And by the way, I expect the entire year of 2025 to be very productive also, with political uncertainties, volatility likely to remain elevated through the whole year, which should increase our profitability of our strategies. So let's talk about market. Market was decline on Monday, but whole week it was bouncing up, and it was pretty good for this week. And volatility also was increased on Monday, but now it's a little bit higher than previous week. It was around 15 on Friday, previous Friday. Now it's about 15.6 after today market decline just an hour ago. So let's see our portfolio. This is our ES futures total positions. You see that it's, as usual, looks good and safe. And let's see our separate trades, how they look like, and who will be a candidate next week for adjustment. First, let's see our Balalaika trade. It is in good shape as usual. Our short put closes short put at 35 DTE at delta 5 approximately. Maybe next week, if market will stay high, we're probably gonna roll it up and out. Our other naked puts, second tranche is at 49 DTE and also at delta 5. So it's very safe position, and we will continue to get some profit from it. So next is V7. It's violin. If you remember, this week, I believe yesterday, we rolled down longs of our hedge 100 points to increase profitability. Why? Because according to our rules, our naked puts less than 30 DTE, right now it's at 28, and delta below 5, right now it's 4.2. So in this case we roll down longs of our delta hedge to increase our tail profit line and get more profit from this position. I don't know, will we close it next week or wait for a little bit longer, but soon we will close this position and open new one. Also we have V8 position, which is much younger. It's only 10 days since we opened it. Our shorts at 49 days till expiration, Vega or Delta around 7. So we're still holding it, and I expect that it's also will perform well. And again, the same as we did V7, soon, probably in 3 weeks, when it will be below 30 DTE, and if delta of our short puts will be below 5, we will roll down longs of our hedge to increase profitability of this trade. What else do we have? We have our replaced income 1, income 2, and income 3 positions. That's how they look like together. It's very in good profit. Right now it shows about 3,700. But if we add here our CDH trades, CDH 1, 2, and 3, altogether still in good profit, 2,800. Total delta is approximately plus 15, but again we should evaluate it together with remaining hedges from our A, B, and C ladders. Let's include them and see how altogether they look like. This is how it look like. A delta will be less because it's additional hedges. Now delta approximately 7.5. If we check our income 1 position, it is just 35 days till expiration left, and delta is approximately 4. So next week, if market won't go down, probably we will roll it up and out as planned and use 50% of credit which we got from that roll to improve our existing hedges. It's gonna be probably A6 and B5. These two hedges together. We will roll up our longs to make it stronger and be ready for leg down if it happened. Also, we decided to run our D ladder as a ladder, and we did a roll last week of our shorts. Let me see it. I guess. Oh no, it's a hedge. 35 DTE, I believe, can be our shorts. Yes. 35 DTE, our new shorts at delta approximately 9. So that's how it looked like. We have some old hedges and 2 short puts. So we're gonna run it as we did our ladder, so we'll wait till it will, delta will, of our short puts will decrease to 3-4 level, and it will be, I don't know, another probably couple of weeks. We will roll it again, up and out, use that credit, 50% of that to add more hedges for the structure. That's it about our ES positions. Also we have our position, sorry, of MES, micro AS. If you remember, we use wheel strategy. We have three tranches. First tranche, it's actually second tranche because first we already closed. It's just gonna be expired today, I believe. Yes, it will expire today. That's fine. Actually, let's close it before I forget. So we got about 770 profit from that tranche. It's very good because total margin for that position was approximately 3,000, so it's pretty big profit. So it's approximately 30% from margin, maybe 25. The second tranche is 21 days till expiration. If you remember last week when we add to our last tranche one more ratio spread, we reduce shorts of this tranche because we already exceed our tail profit. It's safe to reduce our naked puts because they're cheap. To make it with a small negative delta, it will be as additional protection for our new tranche, which is has a positive delta, and if market decline, this structure will increase in profit and protect our loss if it happens for next tranche. I will show you. This is how it's look like. Our main tranche right now, which is 49 days till expiration. We have altogether 3 ratios here, actually even 4. 1, 2, 3, 4. Yes, we have 4 tranches. 4 ratios in this tranche. It is in profit approximately $278. Again, I would like to remind that in OptionNet Explorer they not following micro ES options, so we have to use regular ES to build our position here, and we just need to divide everything by 10 because micro ES futures 10 times less than regular ES. So it's shown here 2,700 in profit, but in real for MES it's just 10 times less. But of course our margin also 10 times less. So it's if we have four total ratios here, so our total margin should be around $4,000 for tasty trade. So everything fine here. Let's talk about our oil position. If you remember, we closed our previous position with full profit. We reach our tail profit and open new one. Right now it's in small profit. We are 1 week in this trade, 8 days. It shows $80 in profit. Why? Because oil started declining. It went down. I believe we opened it when it was around 76. Now it's 73, $3 below in 8 days, but our position still profitable. Why? Because we open it in higher volatility environment. So this is why it's performing well. It's not losing yet. We will see how oil gonna behave in the future. If it continue to go down, we will do roll of our naked puts as soon as they will be approximately at delta 20. Right now it's at delta 11, so it's not rush, but if oil will decline another $3, $4, $5, which I don't expect, by the way, at least soon, we will roll that two of these three naked puts, we will roll down and reduce that risk. Maybe add something to it, we will see. Also we have TLT position, which, by the way, after TLT bounce up, it's in good profit already. It shows about $260, plus we got dividends. If you remember, we were assigned 200 shares, and we have some long-term and short-term puts and calls sold against that position. We will continue to do the same thing by selling that options. We'll try to reduce cost of our shares which we own, and we don't mind if we will assign another 100 or 200 shares, and we will get dividends from that. That's it. We don't have anything else. Again, guys, we had very good months. We had very good year, previous year, from, how I said, from August, when my service was started, my account increased in 5 months approximately 25, I believe 25%, even probably more. And we continue to do the same thing. January was 4.5%. For some of you, probably even higher, up to 5%. And I hope we're gonna get the same kind of results every month this year. Have a good weekend. Thank you very much, and see you next week. Bye bye.